sets, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system straight with financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life's been missing. And whether you are new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have a thunderous lineup of segments for you all to give you as much information as quickly as possible. Before we dive into that, if you're watching the stream, please do me a quick favor and drop a like, follow me, all that fun jazz. Really appreciate it. Now, going into today's segments, what we have, obviously, we're going to do an open discussion right before market opens. Right now, it's 9:19, so we'll do a little bit of open discussion, possibly some live trading, some market analysis up and through 10 o'clock. You see the thumbnail that has Jerome Powell with some duct tape over his mouth, and there's a reason for that. We'll get into that as well. Tariff Turmoil, a little segment specifically on the tariffs, will be at around 10:15-ish. We're going to discuss tariff impacts, market volatility, and some investor strategies, both young and old, so depending on your age bracket, what you could do to navigate this kind of different. We're going to round it out with Adam's. I've been here before, you never asset. So essentially, we take 10 stocks, we fire through them as quickly as we can, trying to give you as much information, as much actionable information that you can use as quickly as possible. And with that being said, we're going to roll right into things right now. Looking at the SPY at open here, currently trading around 550, 51, 57, gap down a little bit in the open and then started to retrace and now heading right into the open as of like right now. Starting to move to the upside a little bit on a pretty sharp little incline here. Consequently, the Q's pretty same pattern here, up about 0.2% in the pre-market. Also looking at IWM, so your Russell, same kind of motion here. So it looks like all three indexes are moving together into the pre-market. That's what we want to see for some level of stability. Obviously, if you watched the show before, you guys know how volatility is very important to me. And the way that we look at volatility is through VIX, VVIX, and UVXY to kind of get an idea of a little bit of longer-term volatility exposure. UVXY in the pre-market moving down to coincide with that upward move on SPY, which is a nice sign there. And VVIX at the opener will be under 100, which we've talked about on streams before, and how important VVIX being under 100 is for some sign of market stability. VIX right now currently sitting at like 25.12. So we're getting into all of that as soon as the market opens. Looking at the news for the day, something you guys want to just keep an eye out for, or things to look out for on the day here. We'll run through a few things, and we'll run through what's expected on the week as well. So for today, today's the 28th. Not much on the board today. Few things you do have, currently, or actively happening, rounding out right now. Press Secretary Levitt speaking right now. But outside of that, not much with the exception of Trump, which every single day, if you've been trading, it's something to do with Trump. And we got Trump having a lunch at 12:30, which could impact the market. Who knows what is said, recording, whatever. And he's meeting with the House Speaker at 2, and then he officially speaks at 4. So he will be speaking as the market closes, or as the market is about to close, but things are happening with him actively where we're at least aware of it throughout the day. So middle of the day to the end of the day. Want to keep an eye on that, or any potential tweets that may come out, because that is the environment we are in at the moment. Now you see the thumbnail with Jerome Powell with duct tape over his mouth, and that's because the Fed is in a blackout period, which I love. That means there are no Fed speakers this week. Yay! That means that we're not going to have randomness come across the board in terms of Fed speakers saying how they feel dovish or hawkish on the market or the environment right now, which is pretty good if you're looking to trade just technicals. Now, with that being said, we do have, so while one thing may not be happening, something else does happen. And what we do have today, and for this whole week, I should say, is over 30% of both the S&P 500 and the NASDAQ reporting earnings this week, which is massive. So the implications you want to be looking out for some of these companies that are reporting are going to be pretty big. You want to look at forward-looking statements and conference calls to get an idea of what these companies are seeing firsthand. Now, keep in mind, these earnings aren't necessarily going to have the impact of tariffs yet, because all that happened in this current quarter, so that'll be on Q2. But you might hear forward-looking statements that could actually impact, or at least hint to us, what they will be looking forward to, or what they're looking at going forward. So depending on the industry, you're going to want to keep an eye on that. We'll talk about that more when we get to the tariff turmoil section around 10:15. But you're going to want to keep an eye on that. Now, heading into tomorrow, we do have obviously a lot of things going on this week. You got jolts in consumer confidence tomorrow. That's during the market. I believe that's at 10 o'clock. Let me just double check. Yep. So they're both at 10 a.m. tomorrow. Then you also have GDP quarter over quarter. That's going to be big. And ADP employment data. Big stuff. We're talking jobs data, which is going to be very important, obviously, to get an idea of the impact of how the market's been lately and how the consumer is feeling. Along with that, consumer confidence, have an idea of how the consumer is feeling. And obviously GDP to see how we're doing quarter over quarter, to get an idea of how we're handling things. So although we don't have Fed speakers speaking this week, there are other big economic factors to keep an eye on. Wednesday, we're also looking at, it's probably the most important day of the week. So that's why I should say, I titled Wednesday's show May Mayhem. So if you don't know already, there's going to be a show today at 9:15, a show tomorrow at 9:15, and a show Wednesday at 9:15, all because this is a very, very important week, and I feel like I should be here to help prep you guys, get you through the end of the month here. So why am I calling that show May Mayhem? Well, we're going to be rounding out the end of this month, and if you want to look at the monthly chart on SPY, which if you're on social media, I'm sure you've seen anyone talk about this. Let me get rid of my drawings here. That's what we call a hell of a hammer candle right now. Now, if it closes like this, or some level of like this, we will revisit this on Wednesday, but that could mean multiple different things. If for whatever reason between now and Wednesday we move lower, that can mean something completely different. So the close on Wednesday is going to be extremely important. Basically, these next 3 days are really going to be critical, because we have a lot of economic data coming through. A lot of things, obviously, with tariffs floating around. You've got this thing with North Korea joining the war now, so that's a whole other kettle of fish. But getting an idea from a technical standpoint from how this monthly candle is going to close, especially because of how giant this wick is, how wide the price action has been, something that we're going to dig into pretty deeply on Wednesday's show. On top of that, you also have PCE data on Wednesday. So strap in. It's going to be one of those weeks, unfortunately. I don't know about you guys, but for me, April has felt like 10 months. It has felt like a very, very, very long time, unfortunately. But hey, we will get through it as we always do. So With that being said, the market's pushing up here a little bit in pre-market, which, we love to see if you're a bull. So the levels I'm going to be looking at today, if we're going to look at a little bit closer on the daily chart, get my lines back on here for you. We are back at Liberation Day pricing. So if you guys remember when Liberation Day happened with the tariffs, we're back there now. So we're back at the point where before the tariff news dropped the market, we're basically there. So the fact that we're sitting here and with what we have, as I've prefaced, for the next 3 days ahead of us, could be a very, very interesting, at least 3 days here in the market. What I'm looking at specifically is basically this 556.32 level on SPY to break above that and push to the upside or have any sense of bullishness. I'm a very, 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 very cautious bull in this environment, mainly because we've had a decent move the last 2 days here. I mean, really, if you go back 5 days ago, 5 trading days, the market was trading, or it hit a low of 508.46. We are now roughly 42 points higher than that, which is over a 10% increase in that point in time, 12%, whatever it may be. That's a big move. Granted, price action's been very wide, so that's not that obscure because we've had big moves lately, so price action's wider. So getting a rebound is not like that crazy. But the fact that we've seen that move in such a short period of time should make you especially bullish heading into this week, on top of everything that I've already said to start the stream. So I, as a day trader or swing trader, would be very, very cautious in this environment until you have a little bit more clarity, especially because of where we're sitting right now. Now, if I had to take a stab in general, I would be personally looking for more bearish opportunities in the next 3 days, unless SPY can successfully thrust above that 556.32 area, in which case I would be more bullish. But it all depends on everything that we see. It all depends on the news that comes out. It all depends if Trump randomly says that, tariffs on China are completely dropped and we came to an agreement and also the war ended and everything's great in the world. That changes this thesis completely. But as we stand right now, that is what I'm looking for. Break over that 556.32 with some volume as well. That is very important. Sometimes you'll see these areas interact on low volume, and that's just a point of saying how you're just sweeping liquidity. It's distribution. It's a time where people are selling, right? You don't want to be chasing at the highs, essentially. So we'll dig in deeper on that once the market opens here in about 2 minutes, so we'll have a better idea of what to look for in that scenario there. Outside of that, we're just going to strap in tight here. So on Mondays, just my general rule, Mondays, I typically take very slow at the open. You tend to have higher IV, so if you're a BTO or a buy-to-open options trader, IV tends to be normally higher on a Monday. You have the weekend price action to consider any news over the weekend, and you typically get a bigger move on a Monday morning open. So I tend to be more cautious, especially as a BTO if I'm buying options, at the open on a Monday because the risk is inherently higher. So as a result, you may want to consider that if you are a day trader here looking at the open, unless you're trading something obviously like futures where that doesn't really matter. But if you're an options trader, that is something you want to be conscientious of as we head into the open here in 30 seconds. Outside of that, we will go through a few names today. HIMS looking pretty solid, up about 7%. Obviously, this is a retail favorite. We're going to talk about this one specifically later today. Nice little move up there right in the pre-market. Rivian's pretty solid. Few names. Dollar Tree is a name that I'm personally long on right now. I was long somewhere down here in that 69 bucks, currently trading 80, had a high at 85.55 in this recent price action, currently trading around this gap here. So a few names you might want to keep an eye on into the open. All right, market is open right now. So like I said, for the first 15-30 minutes here, we'll do a little live market analysis, give you guys an idea of what to look for and prep yourself for the day. If you have any questions specifically on YouTube, feel free to type in the YouTube chat. I've got that pulled up on my screen here, so I'll be able to see and interact with you guys. If you have any chart requests during this time, feel free to drop them in the chat. If I can fit them in, I will. So feel free, if you have a name that you want me to take a quick look at, drop it in the chat, and if we have time, I will, of course, accommodate as long as I can. SPY right now, little bit wicking the 50 MA and pushing to the upside here. You see this POC, so this green dotted line here is where the most volumes traded, at least considering the pre-market for the last 40 minutes or so. That number is 551.69, so keep a tight eye on that. Obviously, all that volume was traded here right before the open, which is a pretty good sign if you want to be a bull. And as you see, a little bit of a markup here. As I said before the market even opened, I don't really want to be chasing the bull side of the trade unless we're north of that 556.32. So there is a bit of a gap here for a few dollars, where I would prefer just to sit on the sidelines here and not be too aggressive either which way, either bullish or bearish, unless we tap that number and come down to the downside or look for a short opportunity. As I like to tell the people in our community over exclusive trading, there are opportunities that I like to call fishing, where you set up things that you can make it so you plan, which you should with every trade, and if this, then this. So if this number hits, then I'll look to take this trade, vice versa. And that's kind of what I'm looking at here for this kind of open. Now, obviously, we want in general, most of us want the market to go up because that's how a lot of us make money. But for people like myself who trade intraday, you may look for those short-sighted opportunities as they present themselves to you. So something to keep in mind, or at least in the back of your head here. Let's take a look at our sectors here just to get an idea of where the strength may be coming in on this Monday morning. Currently, utilities up about 0.3%. Tech is actually the weak spot. I noticed the Qs were opening down a little bit, and tech is actually the only red sector there, which is a little concerning, just because of how important tech is for growth in general. We're actually going to talk a little bit about sectors when we get to the tariff turmoil point of the stream, so make sure you stay tuned for that. Materials showing good strength, 0.5%. Industrials, 0.7%. Health is doing good, 0.5%. Out of the bunch, right up there with consumer discretionary, so like your Amazon and Tesla, and actually communication, 0.6. So pretty good, or almost green on tech here, but pretty good across the board. Tech being the only glaring sector at this point in time, reflected in the Qs as well, getting some volatility here at open, basically flat on the day from Friday's close, while the market is a little bit higher, faring a little bit better at 0.25%. What you want to keep an eye on, and this is what I love, keep an eye on your Russell. So although tech is moving down a bit, your Russell's moving up. I like to look at the Russell, and again, IWM's your Russell 200 or Russell 2000 ETF. I like to look at the IWM specifically to get an idea of sentiment. So when we see the Russell 2000 start to mark up, or at least have higher gains than something like the Qs, at least in this example, that could be a shift in sentiment specifically for like retail trading, or even some hedge funds, because you're seeing more risk on. If the Russell's going up because of the fact that these are typically smaller cap companies versus obviously like the SPYs, the 500 biggest companies in SPX and the S&P 500, whereas the Russell's got the 2000. So you're seeing a different breadth here. And when you see the Russell go up versus other indexes are down or not up as much, it can signal some strength coming in from a sentiment point of view, from more bullish sentiment. So I like using the Russell a bit as a driver for sentiment here. Obviously getting a little bit of a sell here, but that's not without saying that so are the Qs, getting a little bit of a sell off here. You're going to want to keep an eye on that pre-market here. So that's all the way down at 470.38 on the Qs. So keep an eye on that, see if that interacts. Currently interacting with the 200 MA on the 1 minute here, which more than likely what is it, 30% of the S&P 500 is 3 companies. That's Apple, Microsoft, and NVIDIA. So, sorry, NVIDIA. So obviously, if tech is moving down, those are 3 big names in tech. It's going to be a little bit of bearishness. Conversely, let's take a look at volatility. Right now, the VIX is at 25.08. Been coming down. This is the daily chart on the VIX. Been coming down pretty good, actually, the last 5 days or so. I'm looking for it to come down to this 23.09 before evaluating if we're getting a bounce on volatility. So I'm looking for volatility to get shaved down another point or two before we're looking to see if there's some sort of spike there. Now, keep in mind, again, the next 3 days, there's a lot in the works here that could obviously change that. But as someone who trades volatility pretty regularly, that's what I'm looking for, to see the VIX come down to that 23 area and kind of see how it interacts at that point. VVIX at this key level. Remember, 100's a good pivot point on VVIX. So again, VVIX is the volatility of volatility. So it's telling us how volatile volatility is, what are the odds that volatility is going to swing drastically? And when the VVIX is moving under 100, that lets us know that the VIX more than likely is going to continue its trend in the direction it's going. So as the VVIX comes down, and if VIX continues to this downward slope here, that's actually a really good sign. The other thing I want you guys to notice here is the VIX is green on the day while UVXY is red. Now UVXY is an index, or an ETF, I'm sorry, that tracks volatility, tracks 1.5 times performance of the VIX over a 30-day period. So it's not like spot VIX that just tracks like VIX today. It's tracking VIX and a little bit further out, right? And that's why I like looking at UVXY to get an idea of how volatility is, plus a little bit of time. So a little peek into the future, not too much, but a little bit. Obviously you can look at different contracts on the VIX to get different ideas, but that's why I like looking at UVXY, at least from like a bird's eye view on the day here, to see when UVXY is moving down and VIX is sideways up. That kind of tells me that the longer term, or I guess actually is just kind of hesitant, which is a good sign if you want to be a bull. Typically lower volatility, market goes up, not too bad. So really not much, and this is why I typically sit out on a Monday morning for the first 10-15 minutes at least. Pretty whippy price action, but we really haven't gone anywhere. High a day 552.55, low a day right around 551. So you got about $1.50 range, which sounds like we haven't gone anywhere, but in recent times it's not nowhere far. If you asked me 2 or 3 months ago, that's a decent move on the SPY. Today, not as much. And that's just because of how wide volatility has gotten recently. So it's something we have to adapt with as time goes on. But if volatility starts to come down, these moves become more regular. Something else you want to notice here for just looking at my watch list here, a lot of names green. Notice how Rivian's up about 3% here. This is a name I'm going to talk about later today. Him still holding on to some of its gain here, pre-market gain up about 5%. Celsius, a name that I'm personally long on and I like quite a bit. Currently trading 37.39, up about 2% on the day. Looking pretty good. Dollar Tree that I mentioned at pre-market, looking like it's going to get a markup back into that gap. Watch that 81.55 area if you are interested. Micron is not a name that I brought up, but it's something I want you guys to keep an eye on. I was watching, and I actually missed out on the long opportunity. I was watching for this 66.67 area to interact. It did and got marked up. I missed it. I'm not going to pretend that I got it, but I missed that entry, and right now it's sitting around the 78.71 level, which is another level, or that would be the first take profit level I'd look at. So now keep an eye on this one if it rejects or pushes here. This one's a weird one for a lot of people. This has burnt a lot of people. I know it's burnt me in the past. It cannot find its footing north of this like 107 to 114 area. Is a strict heavy wall on Micron. But with that being said, if you get an entry somewhere between, like if we do get marked back down and we hold this general area, the 66 area, if you get an entry there, you could have a decent risk to reward profile, risking that 61.54 low for that. There, and if that range breaks, you've got a lot of upside here on Micron, where you could actually double up, go over 100% here on Micron. So that's a name you definitely want to keep on your radar. Obviously affected by semiconductors and the performance of semiconductors as a whole, with tariffs, with precious materials, etc. So something you really want to keep an eye on your radar into the upcoming, actually the upcoming days. It really is. The next 3 days are very, very, very critical for the market, in my opinion. Like I said, not much going on here on the SPY at all. It's pretty dry. We are not seeing too much of anything at all. You do have some European bankers speaking right now, but not much news there. You do have the 6-month bill at 11:30, so that could cause a little bit of a bump in the market. But really, again, today's going to more than likely be a pretty chill day for the market in terms of news catalysts. So that will be something to be mindful of. Anyone else's audio cutting out badly? That's interesting. Apologies if that's happening. That's something we'll take a peek at when the stream is over. I'll see if there's something I can change on my end going forward so that doesn't happen. And also, so if that you are having that issue for whatever reason, you can watch these on demand. So everything's recorded. It's uploaded straight to my YouTube channel. So you can always watch these back on demand as well. But if you're enjoying the stream, if you could do me a quick favor, don't forget to like it wherever you're watching, on X, on Instagram, on YouTube. Drop me a quick like, a subscription, a follow, whatever it is. Help me, drop a comment, whatever it is, just to help me in the algorithm. I appreciate it very much. Little small fish trying to start out here, so it helps quite a bit. Jigsy, yes, audio cutting. Interesting. Okay. Appreciate it, guys. I will take a peek at that at the end of the streams. Can't change anything as we're live right now, but I will work on that for tomorrow's stream. So my apologies. We'll check into that. So stick with me today. I appreciate it. I'm sorry if your audio is cutting out. With that being said, let's try to roll into what to watch here at this point in time. SPY is actually back at the highs again, so this is actually pretty interesting if we can get this break. Notice how UVXY is moving down as well. The VIX still sitting, VVIX still sitting around that 100, just broke under 100. VIX now at low of day. So we're seeing volatility come out of the market right now, and the market's responding very favorably. Qs are up. IWM broke a new high. Watch IWM more than anything today. Today specifically, keep an eye on IWM. Watch this 197.26 area. Getting above that 197.26 could cause a near-term sentiment shift. It's not out of the woods by any means. It's still pretty bearish, but short-term sentiment could shift to the upside, especially with how much we've sold off here on the Russell. That could be a good sign for any potential longs on your smaller cap, mid cap names. So you definitely want to keep an eye on that to get an idea of if those are going to hold or not. Alrighty. But with how we're sitting right now, I'm not going to be looking to chase anything or take a trade just yet, if at all, to be honest. Like I said, this week's going to be more than likely a pretty rocky week. Rocky in the sense that there's a lot going on, and people may feel less confident to, and by people I just mean like traders in general, may feel less confident to make certain trades than they otherwise would. So that's something you definitely want to be mindful of, because obviously we're all looking at the same charts, we're all looking at the same information. It's how we interpret said information and how you make money, right? That being said, you want to be very careful, because if we're all interpreting this week as a risky week, so to speak, or at least smarter money is, then you want to at least be mindful of that heading into it. You could see a lot of false moves due to hedging for earnings reports. You got Apple and Microsoft this week, so those are big companies. So you could see the hedging start to take place as early as right now. And consequently, you're going to when people start to hedge, you might see bigger companies or hedge funds start to hedge with high amounts of options. Consequently, that can move the stock. You can have delta push a stock one way or the other. So you could see false moves one way or the other. So it is something to be very mindful of in general this week. Yeah, I'm not going to be too overtly, like I said, very cautious bull. I think IWM is what you want to keep an eye on. Already up 1% today. It's leading the pack for the three indexes right now. If we do break 553.5, 554 on the SPY, I think you're going to get a quicker markup to that LOI, that 556.32. And if we break through that with some volume, you may get up to like 560. Today would be crazy. That would be a good move. That'd be a good way to start the week. So just listing out the possibilities here. I wouldn't, like I said, I wouldn't be bearish unless we get a move up on lower volume, then take a short. Otherwise, it's like a cautious bull. Like I don't want to be too aggressively bullish, but I'm not looking to short right now. Like it's not wise to short right now. Watch UVXY right here at 29. A lot of these whole numbers, especially because obviously there are options on UVXY, so that can influence how volatility just behaves in general. Obviously, there's options on VIX as well. But breaking 29 on UVXY may push it lower to like around 28, which could cause a little bit of upthrust in the market, considering we're higher than where UVXY was lower in the day, which is an interesting point to note. Wow, HIM's pushing today out the gate, almost 10%. What a move. I actually sold some puts on HIMs. And I would love to sell some calls against those sold puts. I wheeled some HIMs puts. I got assigned at about 20. So those are now profitable on the shares. So looking to sell calls on that hopefully this week, honestly. That'll be pretty nice. That's something I'm keeping on my radar in general. Talked about Celsius. Rivian up 4%. I wouldn't sleep on Rivian. We'll talk about this when we get to the tariff turmoil section of the show, but Walmart's a name you want to keep an eye on. If you go back and look during all the times we've had a bear market, or any times we've had a stronger recession, Walmart's actually been pretty strong during those times. We'll talk about why later. But the one thing that makes this situation a little bit different is other bear markets didn't have tariff impacts, so to speak, and tariffs specifically affect Walmart. Now, are people going to stop going to Walmart because they raise their prices because tariffs go higher? Probably not, because everyone's prices would go higher, and Walmart more than likely would still be the cheapest. And they definitely have the weight to throw around to compete if that were to happen. So we'll talk about that in a little bit when we get into the tariff turmoil section, which, depending if I'm going to take a trade here in a little bit, will depend on, maybe I'll start that off a little early, get the ball rolling so I'm not just yammering about the market, which is, again, not touching it unless we break like literally right here and aggressively push to the upside. Otherwise, I could take a pretty low, depending on IV. Let's see what IV is like. I was going to say, you could take a low risk short here. 33% at the money on a 0 day. UVXY is at breaking 29. If it it might just come down here pretty quick. I'm looking at the 553 puts. All right, I got some of the 553 puts at 183. I'm looking for it to stay sub 553.50, which it's at. So pretty risky move here on a light size to go against the grain here. But see if it pays off. I'm not looking for the holy grail here, but 10-20%, at least coming back to my first price target, probably be around this 552.83, and then watch basically the high of this candle here. That would be 552.55. So keep an eye on that. Got about 4% here. Nothing too crazy. Let's see a little volatility come through. Be ready on a trim here. %. Come on, a little bit more. MACD is starting to curl over here. And the other thing you want to look for, volume is actually kind of tapering off, which that could be bullish or bearish. Kind of depends on how you're looking at it. So you want to see him fall through here. All right, I'm going to take a trim here. All right, trimmed it. And I'm going to take another trim. All right, so that was 14%. If you're in a smaller account, you can obviously put a stop loss at break even, be completely risk-free. So we kind of hit that first price target right on this area where the 8 EMA is. You're going to want to see this breakthrough. You have a nice little volume profile gap here. I'm only looking really to play to this, basically the high of this wick. 552.55. That's it. No more, no less. You could stop loss runners there or whatever you want to do. But that's where I want to get the meat out of this trade. Very tight risk. If we start to see some volume come in and push to the upside, so you see support come in at the 8 EMA, you also want to jump out of the way as well in this scenario. But did time basically at the top. Oh, there we go. Yeah. All right. I am now all out. Let me get out. All right. I'm all out. 31%. Wait, let's hit it. Let's hit it. That was better than I thought. Cool. Love it. 31%, nice and quick. Thumbs up in the chat. YouTube chat, X chat. Those are the ones I can see. Do well. All out. We hit my price target. We melted right through it. I'm assuming there's some sort of news or something. I'm not going to get greedy. Anytime, especially if you're in a 0-day option, you get that IV spike, you want to get the hell out. If you want to, you can obviously hold size. Most of mine got out at around 240. So right now trading like 250. So there was more on the table there. I would rather take that IV spike because anytime you get a wick down, you could get a move back to the upside, especially short. I never, ever, 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 ever want to overstay my welcome on a short. Ever, 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 ever. Never overstay your welcome on a short. Period. Period. Questions? Anyone have any questions about that? We essentially sniped the top. That was a nice 3-minute. I don't even know. Was that 3 minutes? 4 minutes? What was that? 4-minute trade. Not bad. Now, obviously, if you want to, you could hold runners here. You'd make more money than me. I got out at 240. Currently trading around 250. So God bless if you did. But yeah, nice little trade there. Not too shabby. Okay. YouTube chat specifically, because I see 3 people typed in there. Did you hear and were you able to see that? Because I'm going to feel bad if audio cut out through that whole thing and it was just a mess. Hopefully someone can confirm that was everything went swell there. I like to, when I can, if I can include a good risk to reward trade for you guys, especially on the show, I want to highlight it. So I'm happy we had that. That way you guys can see what a quick trade can look like in that environment. Yes. All right. Awesome. Thanks, Jixie. Cool, cool, cool. Now, if you are still holding that short, you could look right around here for this 551.86 as a potential exit. But again, you're not really getting much. This is so real quick lesson. That right now you're at 251 on those contracts, 243, right? That IV pump, let's see what the high on those contracts were. So during that IV pump, those contracts got up to 252. So even if you continue to hold, and especially on 0 days, you would only get at max 2 minutes later 257. So an additional 4 or 5 cents. Even though the market moved down. Okay, it didn't move down as much, but still. Anytime you see a big IV move, you're going to want it. You're going to want to get in on that because that is where the money's made. Now, obviously, if there's news behind it, you could ride the wave a little bit. And it also depends on your risk tolerance. On a week like this, and with everything that I've outlined here, you're going to want to be more careful than not. So getting out right away, hey, 30%. Where are you going to get 30% in 3 minutes? Like, always put that into perspective, right? Some people wait weeks to get 10% on equity or even on a swing trade. So if you are blessed enough to get north of 10% on a day trade, always take it. And people in my community, I say it all the time, we get 10% gain on a day trade. You will see me trim 99% of the time on 10% because 10% is a lot when you compound that over and over and over and over. Richard said, saw it, perfect timing. Right on, Richard. Hopefully you caught that. All right, guys. It's 9:53, so we'll roll into the tariff turmoil. I'm happy I got a trade out for you guys so you guys can see that. Can I confirm my reasoning for going short? Sure. So what I look out for a few things here. Your MACD was getting a little overextended. Your volume really was kind of iffy here. You saw a little bit of a volume pop here at 946. As you head here, I was also keeping an eye on UVXY. I mentioned that 29 level being pretty important. We were under that, so that's why you saw me hesitate a little bit, where volatility was kind of at support or should have been at support, and you still had a green VIX and VVIX. So volatility was still a little iffy, but it was enough for me to want to take the trade, knowing that this move looked a little overextended. Now, it was risky. And that's, again, why I hesitated a bit and that's why I was only risking, like I said, I think I said 553.50. So we went 5 cents over my risk in theory. It was very quick. But when I'd set pretty tight parameters. Now, if we blew through that, I would have cut the trade right away, to be fair. So, again, it's all about risk to reward. If I'm risking here, so let's use plain numbers here. What did I get in at? 183, right? So realistically, I mean, now I can't go back in time and see what the delta was, but realistically, let's say, let's play a game. Let's just pretend. So let's even say the delta was 60, right? And let's say this broke and went to 554. So I had to cut it in that time. Then I would have had about a 20-cent loss or so. So a 20-cent loss would have been roughly 10, 11, 12%. and I was looking for at least like 20%, because we're talking about, again, like about $1 lower, which is again, now the delta's changes, obviously appreciates as we move in the money. So I was eyeballing like 60-cent appreciation on the delta. So I'm risking a 20-cent loss versus 60% gain. So quick math, 3 to 1. Granted, these are things that you can do pretty quickly, like especially if you do it day after day after day. And sometimes you can kind of just look at things and get a feel. Like typically, depending on the environment, I will go closer or further out the money depending on what I'm looking for. So in this scenario, I went at the money essentially. I did a 553 put because I knew the risk was higher, versus like sometimes, especially in our community exclusive trading, I'll purposely go a little out the money to capture a little bit more of an IV and delta appreciation. Obviously at the risk of, a lower cost contract's a little bit more risky. So depending on the environment, I'll make a decision on where on the chain I want to sit. And in this case, sitting at the money made the most sense because it lowered my risk, and lowering my risk also lowered my return theoretically. But at the same breath, or in the same breath, the dollar return theoretically would be greater unless there was a big move, which in this case there was a bigger move, but that was just a happy accident, right? I wasn't planning on a bigger move. I was planning on this coming down at a slower pace. So if I'm coming down at a slower pace, I want to go closer in the money, not further out. Happy days. Let me know if that explains things a little bit better, or if you have any additional questions on that. But that was kind of the logic there, looking at volatility, looking at where the market was sitting, and looking at how volume was being portrayed through this little up thrust here, and also looking at your MACD in general. If you don't know, and if you're not part of our community exclusive trading, which this actually has to update my chart here, I have now, what's that, 58 out of 63. So on the year, because last year I did really, really well shorting the market. And I don't ever, I'm not like an Uber bear or anything, but there are very, 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 very rare scenarios in which I short the market. So this year I said to everyone in our community, I'm going to start tracking it. And so far I am 53 for 63 alerts on shorting the market, which, and at least all of those are a 10% win. So it is just very rare that I personally take a short, but when I do, it, like, again, I never overstay my welcome in a short. The risk is tight, like the risk is typically very calculated, and it makes the most sense. In this case, again, on the day in general, and you heard me say even before the market opened, I'd be a cautious bear, but when you have the opportunity where I'm thinking already that I'm leaning more bearish on the day, or it's like going to be a chop day, I would rather wait to see that bearish opportunity, and that's where that kind of highlighted there. The other thing you want to keep an eye at, look at these candles leading into that moment where I took the short right up here. Wick, 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 wick. Anytime you're seeing wicks and closing lower, that's showing weakness in a, typically, right, in a bubble, you're showing weakness on the bear side, in the bull side of things, because people are selling and dropping the price, right? So all of these things mixed up together are what formulate a trade. And that's how it worked. And this worked out way better than this would have been 100% gain at this point. Tapping the 200 MA is literally 100% now if you held on this long. So God bless if you did. Hopefully that helped one or two of you out there. Happy to see. Great. Thanks. Right on, man. Happy that helped. All right. So now that we're through with that, hey, 10 o'clock, right on time. Let's roll into Tariff Turmoil. So today on this segment for Tariff Turmoil, I'm going to discuss the impact of tariffs. So it's a quick little highlight. We're going to go back in time a little bit to see what's happened in the last month or so with the tariffs. I want to highlight a few things on market volatility and a few investor strategies. So for people like you watching, what you could do to tackle the market in this environment, whether you're young or old, there's a few ideas at hand that I have for you guys, for you to consider. Before we roll into that, if you could do me a quick favor, if you haven't already, please like the stream, drop a comment, follow me, share, subscribe, etc. Or do me a quick favor and share this out with someone who actually might find this useful. So even if some of you are younger and you have parents that might invest, this little segment on tariff turmoil specifically, I think is very applicable for investors, I want to say. A lot of what I do is trading focused, so more short to midterm, as is our last segment at Adam's Asset Assault. But with tariff turmoil specifically, it's more of a highlight of what we're looking at here near term. This is why I'm saying investors people who are more longer term, who don't really watch the market as much, or if people are just generally want to get caught up on what's going on with tariffs, if do me a favor and share this out to them. This, I think, would be a very good segment. I'll have the chat open on YouTube, so if you guys have questions during the segment, please do me a favor, drop them in the chat. We'll go over everything for you. Make sure you feel comfortable, because this is a very complex topic. I'll be honest with you. I'm not a macro expert. I'm not going to pretend to be. I'm not going to lie to you guys and say that I am. But been doing this for a little while, and I understand things hopefully better than the average bear. So hopefully what I say here can help highlight a few things for you guys so you feel a little bit more informed about what's going on if you're not already. Okay, so April 2nd. So we're going to roll back the clock to April 2nd. It feels like a year ago that this happened, but that was the day that the tariffs were announced, which caused great volatility in the market. Man, can you believe that was this month? If you're like me and you trade every single day, that feels like a year ago, but it was literally 26 days ago, and that's incredible to think about. Anyway, as a result, when these tariffs were announced, there are a lot of banks like JP Morgan and Goldman Sachs that started to move their outlook to a more neutral market. For people that just look at things from afar, this could signal more cautiousness around the board, and consequently it did. Here, I'll pull up the daily chart on SPY. So as we talk about this, I'll highlight sections. We'll get rid of these lines here since we're more informative here. And this is the day right here. SPY was trading around, well, let's see. We opened up that day at 555. We closed that day at 564. And this was the day the tariffs were announced. Or I'm sorry, I should say that evening into the end of the day because it's a little misleading to say that. But that was the day everything started, right? Consequently, we gapped down, right? Gapped down and gapped down again. Big fall in the market. It even fell as low as 481.80. Can you believe that? Almost 100 points off of the SPY within a 3-day period. In that time, like I said, banks were coming out and signaling a lot of more neutral standpoints, which shows a little bit more cautiousness around the board, especially to investors like yourself or people who aren't watching the market like every single day. They're not in the weeds, right? The other thing you want to be mindful of during this time, we saw the tariffs cause the euro to surge about 10%. Which signaled potential challenges across the board that were anticipated by EU exporters with new tariffs. So companies like L'Oreal, for example, or Unilever. I can never say that company right. Unilever. They make like soap and stuff. But seeing the euro go up could signal that those changes were affecting or anticipated to affect these companies as well. However, in that time, we saw there being a pause implemented, and consequently, some of the volatility started to leave, right? Obviously, this big drop, like I said, 100 points in the SPY causes a big spike in volatility. We want to go back in time as well. Let's look at the VIX. And the VIX at the market low hit a high of 60.13. So putting that into perspective for you, the last time the VIX hit 65.73, so another 60 VIX, right, was back in August when we had that little bear market scare thing. Going back even further, if you want to go all the way back to COVID, let's go to weekly chart. Hold on. There we go. The only other time we had a 60 VIX was in COVID, or at least recently. Let me preface that. Where it got all the way up to an 85. Just for context. So 85 VIX was telling us the world is shut down. No one can make money anymore. We're all going to die. The world ending, right? Apocalypse. 85 VIX. Tariffs. 60. So just from now that you've established a scale and understanding the volatility here, you could argue that this volatility is a little bit much, that we're saying like, hey, things are going to cost a little bit more to get a 60 on the VIX. A little extreme, at least in my opinion, right? Going back in time even more, the last time you had an 89 VIX or another spike on the VIX was the 2008 market crash, financial crisis, that whole shtick. That was up in 89. That was pretty bad, right? But past that, never had a 60 VIX. So there are three other points in time where the market was that volatile. As volatile as tariffs being announced. Little odd to me. I don't know about you. Make your own decisions. But with that being said, we'll get back on track. And in the current times now, you're noticing the market starting to stabilize, which is great. The volatility is coming down. Prices are going back up, at least on the general market. And now we're back to, like I said, this Liberation Day pricing. We're back to where we were almost. We're almost there. And political headlines, as a result, have been more seen as like background noise. There's a lot of people on the internet will say, or like the betting crowd will go, the nothing ever happens bros. Like there's people who bet that nothing ever happens, just threats, right? Back and forth. And that's kind of how we're seeing the market interpret these things. I mention this to people in our community all the time. As there is the same information over and over and over and over, you become numb to it, and the market becomes numb to it too. Think about it this way. If someone told you some shocking news, or let's go even more extreme, you're used to, if you see someone murdered in front of your eyes for the first time, that's going to be shocking, right? But then if you see someone murdered in front of your eyes for a second day in a row, that's still shocking. But if you start seeing someone murdered in front of your eyes every single day, it's another Tuesday, right? That's where we're getting in the market with the tariff scares, right? The headlines are so politically driven, they're so volatile that nothing ever happens. Like, we're not seeing the effect on these things yet. So the fear's coming out of the market a little bit, so we're causing a lot of great to see. Like I alluded to, the market is eventually and going to continue to grow more resilient to the same news every single day. What you want to be looking for, especially in this scenario, specifically with tariffs, is how companies react, which is why this week is extremely important, with over 30% of the NASDAQ reporting this week and over 30% of the S&P 500 reporting this week. 1/3 of both of these very important indexes are reporting this week to kind of give you an idea of the impact of these motions. Now, keep in mind that those earning report are coming in place prior to tariffs actually going into effect. Consequently, next earnings round, so Q2 earnings, are going to be what really matters to get an idea. But, as I alluded to at the beginning of the show, the impact of tariffs are not to be underspoken with what is said by CEOs and people on conference calls, because the statements said on conference calls actually could hint at where the impact is going to be felt by, I almost said by COVID, by tariffs. That's going to hint to us what may actually occur, right? Because these companies are going to come out and they're going to give you forward-looking statements and say, hey, we don't know what's happening with these tariffs. Things are going to cost more. Our prices might go up. We might lose market share. Whatever may happen, right? Might be hard to source XYZ because now we have to find a new supplier. You're going to see these statements take place, or may see these statements take place, and that's where you're going to see potentially more fear come into the market, where you could see volatility spike again. Conversely, you may have companies, specifically like more SaaS companies, that are saying like, we're not really scared. We don't really see the fear in it. Shouldn't really affect us. That rhetoric is also going to work positively in the bull motion, or the bull side of things as well. So listening to these conference calls this week specifically will kind of give you an inkling on where we're headed into Q2. But that Q2 earnings, so 3 months from now, that's going to be what you're going to want. Now, I alluded to this earlier, but I wanted to talk about some investor strategies you could use depending on where you are in your trading career in general. So during this market, how are you combating this extra volatility? What is there to do? What can you do? You may ask someone like myself or anyone else, like, how can I handle this environment? What should I be doing? I would personally say to look at defensive companies, and defensive companies tend to be companies that are consumer staples. Think of Kraft Heinz, right? Nothing else on my mind right now. Kraft Heinz. These consumer staples are companies that aren't going to go anywhere. Yes, the price of ketchup may go up 10 cents or whatever, right? But they're not going anywhere, and I'll get into that a little bit. Other kinds of companies you want to look into are utility companies, electric and water companies specifically. These are typically, so your consumer staples and your utilities are boring stocks. These things don't typically move a lot because they're bigger companies. They make consistent money. There's nothing surprising. There's no real growth. They're in the mature phase of their whole thing, and nothing really happens with them. But they're just seen as more safe, right? As a result, they make money, which is what you want to look for in this environment. Story stocks in this environment get killed. Now, I will say, and let me define what a story stock is. A story stock is a company that may have 200, 300, 400, 1,000% growth, but they make no money. Or they make some money, but they're not profitable. Those are companies that have great growth prospects that may look really good on paper into the future, But you have to keep in mind, if it's really expensive to borrow money and if economic conditions are getting worse, these companies have a belt around their neck and they are getting strangled hard. As the Fed looks to cut rates, which they've already said they're going to do 2 times or 3 times this year, these are companies that could be positively affected by this. As money becomes cheaper to borrow, these companies could benefit because they can refinance debt that they took out at a high percentage, consequently allowing them to have more money in their coffers because they're spending less on debt. So you want to, in general, if you're someone who's more defensive, you're just looking to wait out the volatility here, you're going to want to stay away from these story stocks, or at least reduce your exposure in these story stocks. Your biopharmaceutical companies, your small cap companies, mid cap companies. You're going to want to reduce your exposure in these high growth names in general, because they don't have the money to back it up. Now, Beastwood says, Tesla, in my opinion, is a story stock right now at the moment. And to some degree, you're absolutely right. They're selling the future to people, right? They're selling robo-taxis and robots. They're assisting people. And I'm not saying good, bad, indifferent either way, right? I'm just saying there's a lot of forward-looking things that have yet to come to fruition from a company like Tesla. Now, they do make money, right? They sell cars, right? They actively are bringing in money, but you want to really look. Now, I'll be honest with you guys. I'm not super deep into Tesla's balance sheet, so I don't know. But you want to keep an eye on what their debt looks like, long-term, short-term debt, if you're an investor for that purpose, because those are the kinds of companies that could get hurt in this kind of climate. Not to mention all the other stuff that goes on with Tesla specifically. But yes, you could make an argument there that Tesla could be a story stock. Now, another alternative to consider. We always obviously talk about stocks. This show is mainly focused around stocks. But you could move to high yield corporate bonds on these safer companies. So if you're looking for a little bit more growth, in general, instead of investing in like again, we'll use Heinz as an example, Kraft Heinz, you could look at corporate bonds, because for these companies that make a lot of money, they're not going to go anywhere. They're not going to go out of business, right? But you could look to sell them debt, give them money instead of owning the company, and have a bond with them that are at least AA, AAA rated bonds where you are cashing in on their debt. You're making money on their debt. A corporate bond is something that's a little bit safer and less volatile than a stock, as long as you know your risk essentially is that the company is not going insolvent. So, again, picking a Kraft Heinz, the company more than likely is not going to go insolvent, right? But if you think the stock isn't really going to appreciate much or do much, you could sell them debt and just get a set percentage gain. Nothing wrong with that. On top of that, your risk there essentially. So when you buy stock can go up or down. You can sell at a loss, sell at a gain. When you're selling a corporate bond to a company, your risk is, do they go bankrupt, yes or no? If they don't go bankrupt, congratulations, here's your return. If they do go bankrupt, you're SOL. So these are your options here. So it kind of depends on your risk profile, but for someone who's older, perhaps, who is considering shifting into some safer companies, or even if you're younger and you just want to diversify a bit, having a high yield corporate bond is something that you could do to have different exposure in the market. In general, another thing to consider is just staying diversified across the board, right? So maybe not being AI focused is like the smartest thing to do as an investor right now, or investing in like Celsius, like energy, the beverage market, right? Being diversified across the board into different categories, not being solely in biopharmaceuticals or not being solely in financials. Getting a healthy spread, especially in this environment, could give you different exposure, actually, where some days certain news could affect certain sectors better than others. So having that exposure not only in the realm in which the companies operate in that you pick, but also their market cap. So a lot of people online will talk about diversification through different companies, through just the segments in which they operate. Healthcare, financials, again, consumer staples, right? These are segments. But they don't talk about diversifying risk through market cap. So you can diversify your risk in large caps, small caps, mid caps, mega caps, right? Spreading that all out and getting a good mix of market cap diversification plus diversifying through different markets is a good way to stay balanced and diversified through what could be a more volatile market. That also gives you exposure to more big swings in the market. So if you get a big move one way or the other, you can perhaps take a a smaller size in terms of dollar amount bet on a smaller cap company that may get a 20, 30, 40% appreciation, could also get that in a loss, but you're having that smaller dollar amount to have that exposure to the volatility of the market, and then put more shekels over in the bucket of the bigger company that has a different market or a different market segment targeting. So that way you have a little bit more defensive. So you can kind of mix around your risk a little bit here and not be so even keel on just diversifying to different companies, but diversifying to different companies through different market caps, which is not something I see people talk about online literally at all. So something to consider. Thank you for the kind words, Beastwood. The other thing in general, especially if you're a day or swing trader, setting strict stop losses on your positions because you can always get back in. Now, keep in mind, there is a tax implication to this, of course. Obviously, if it's a short-term trade, then there's a short-term tax associated with that. Obviously, if there's a loss, there's a wash sale potential tax implication. So there are things to consider there from a risk perspective, but in general, you could set up your trades and look for those high risk to reward trades when you say, hey, this stock's trading at $1. I think the lowest I'm willing to risk is like 80 cents, but it could appreciate to $1.50. So now, or I'll say $1.40 to keep it easy. Now you've got a 2-to-1 risk to reward, where if I'm in at $1, I'm looking to make $1.40, so that's 40% gain, or I'm risking a 20% drawdown, right? Having those strict game plans set up prevents you from saying, okay, well, I'm going to give it a little bit more rope here. And I do it too sometimes. But in this environment specifically, since it's very news driven and very heavy in that regard, where things can move very quickly, having those strict game plans set up for yourself can stop you from making silly mistakes where, oh, I'll just let it go a little longer. I'll let it go a little longer. I'll let it go a little longer. And that can put you in a bad boat. And I've seen it happen personally with some of my positions as well with this market drawdown. I did not anticipate the SPY to lose 100 points in 3 days. I just didn't, okay? But a lot of people probably didn't either. And you adapt, right? And when that happens, you change things up. And now that we're comfortable and we're stabilizing a little bit, you can take those decent risk to reward stabs here in this environment where you're setting up a boundary both ways and understanding, hey, I'm willing to risk this because I'm going to make this. And as long as you have those strict rules set up for yourself, you're probably going to see some success if you are like a trader, day trader, swing trader in this environment. The last thing I want to highlight for you guys is, although rates may look to drop, parking your cash in some CDs is not a bad idea. It will insulate you from inflation. So inflation's pretty high right now. We're still growing inflation at like 2 or 3% now. But parking your cash in a CD is going to net you, depending on the time frame, but if you're looking at like a 12-month, about 4%, depending on the bank, obviously. And a 4% CD, if you're someone who's super defensive, and this is someone who's like much older, who like you don't want to take big risks, parking in a CD is just going to keep you safe. You're not burning money due to inflation. You're also not really exposed to that much risk, conversely. The next step up from that is going to be the corporate bonds that I spoke about earlier, where you take a tiny bit more risk, but you might get a slightly bigger reward. Or you can use T-bills as well, which, depending on how you feel about the country right now, T-bills may not be the smartest option too. Kind of depends. But parking your cash in a CD, not a bad idea. You can always do a CD ladder where you take out multiple months, but typically you don't want to do that unless you're in a raising rates environment, which right now rates are stagnant and they're looking to come back down. So taking out those longer term CD, a better decision to make. In conclusion, it's really about how defensive you really want to be. Age, I would say, is the most important thing to consider. So no matter what I'm saying, everyone's got a different risk profile. If you're watching this, you're more than likely anywhere between the ages of 18 to 65, 70. There's a big breadth of people who may watch this program. I think age is going to be the most important thing to consider, mainly due to the fact that anything that I've said here is getting us through the next few weeks, the next few months or whatever, but you have to think about how much time you have left and what your goals are. And if your goals are more near term, i.e. retirement, you want to buy a house and you need the cash that you have right now and you can't risk it, you may want to take a more defensive position. If you are looking to be, or if you're younger and you can take a little bit more risk on them, maybe you buy some of these riskier companies on the dip and allow yourself a little bit more risk. Really depends on you. And I think that's the most important thing to take away from this whole segment, that it depends on you and your age, in my opinion. That would determine ultimately where the most success or failure is actually coming from looking at this strategy. And that's going to wrap it up for the tariff show. I hope you guys enjoyed that. And hopefully it offered you some insight into what has happened, what is currently happening, and what to do going forward. Now, with that being said, we are going to roll into Atom's Asset Assault. Or the nuke alarm's going off, so I'm trying to make it. We got to bring up the energy, right? We brought the energy down a little bit. We were a little calm. We're going to bring up the energy, hit an explosion or two. Let's get an air horn in there. Boom, 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 boom. All right. Well, so Atom's Asset Assault. If you've never seen it before, the point of this segment is to bring you 10 stocks quickly with my thoughts on it. I like to start a little timer, which I don't think I could pull on stream yet, but I'm going to pull one up here, unfortunately. But I like to get through at least 10 stocks in 20 minutes. So that's going to give you an idea and give you actionable information in a short amount of time. So that's my goal here. It gives us about 2 minutes of stock, so nothing too crazy, but gives us a little bit of flexibility as well. Some of these will take a minute, some will take 3, right? So on the docket for today, Google, Rivian, Thriller, Hims, Nvidia, Playtika, Ford, Tesla, UPS, and GameStop. So a few favorites in there, I'm sure, and a few names you may not have ever heard of. The timer is ready. Strap in. Here we come on. I've got a lot of sad effects. Like, I want to use some of these a little bit more often. We got the wow. Classic, right? I need like something. We got boom, right? Okay, we'll do the explosion. And here we go. All right, first on the list is Google. Google currently trading at 168.58 today. Now, this one actually came down, all-time high on this one, 206.81. If we zoom all the way out on the monthly, that's what the monthly looks like. Not a fantastic chart, but we're zooming in a little bit closer here. Kind of an interesting risk to reward here on Google. Specifically, their earnings, they, in my opinion, blew it out of the water. They had a very good earnings report. Full transparency, I am long around this like 160-ish area. So actually I'm long 162-ish. So this is actually discounted for me personally here. But in my opinion, there's a good risk to reward here. I don't think obviously Google's really going to go much of anywhere. And I believe that this sets with how their earnings have set up and with how the chart's set up here, we're more than likely going to head out and make like an inverse head and shoulders, with this shoulder being here. Here's your head, your second shoulder being in this little realm here, somewhere in the boundary of between this 163 172 area where we consolidate before a break to the upside. And you've got a lot of gaps to fill. You got 2 gaps to fill, 3, this big old gap up here all the way to 202. I think Google's a solid company. I don't think it's going to go anywhere. They make a lot of money. I think it is a name to keep on your watch list. Obviously, if we get up to this 200 point, what would that be? Let's just pretend you got a 25% gain on equity on a company that I don't think is really going to go anywhere. Pretty safe to risk to reward. If we go back to what we were just talking about a few minutes ago, you could even risk these low here at 140. It's a $20 drawdown for about a $40 appreciation, a 2-to-1 risk to reward in my opinion, if you're patient. It's not going to be a quick mover, but I think it's something where you could diversify some money in some tech exposure without it being too risky in my opinion. Next on the list is Rivian Automotive. This is an interesting one, a retail darling, a retail favorite for sure. Getting really tight here on the weekly chart. You got your MACD curling up. You're really tightly bound here in this 12 to 13 range. Zooming in on the daily as well, you just broke, you're trying to break above today, the 200 MA, and you're above your POC, where volume has been sitting at least an important period of time here, going back until the beginning of the year. Consequently, your bearish side of things, you're looking at a higher low, a higher low, sorry, a lower high, a lower high, a lower high, a lower high, and today possibly another lower high. So if not long already, and if you like Rivian and like a bullish prospect on Rivian, I'd be looking for a break above this candle right here. So basically 1349. So that candle on basically April 1st, 4-1. Getting over that could spark this thing to push to the upside. That'd be your first instance of a higher high near term instead of a lower high. There we go. You got earnings coming up, obviously, at 5.6, so that's going to push it one way or the other, so take that into account with your risk profile. But near term on the daily, you're curling up on the MACD, you're above on EMAs and MMAs, your weekly's turning around, even your monthly. I mean, this thing was at... I think this thing is primed to blow. It would not shock me if this stock ended up being back at like 50, 60 bucks by the end of the year, honestly. I think Rivian's a pretty solid company. I think they're doing well. The only thing to keep in mind is that Rivian could be impacted by the tariffs due to the availability of like materials to make batteries and whatnot. So depending on how earnings go, you may want to listen to what they say. That could, some forward-looking statements obviously could affect this company. So be mindful of that. Next is Thriller Group. This company sucks. I'm highlighting it because it's a very popular company right now. It's got some traction over on StockTwits. Yeah, I wouldn't touch this with a 40-foot pole. I don't know if any of you have heard of Thriller. Their CEO's weird. He's weird. The company's weird. They're now trying to... They're a streaming company, right? Never really took off. Bad business deals. This thing up at 25 bucks. It's now all-time low, 51 cents, trading $1.30. I'm highlighting it again because I think it's a garbage company. I think if you wanted to take a stab at a long, 99 cents to $1 is where you would do it. I personally wouldn't even... I hate the company, so I wouldn't take it. But if you like the company, I wouldn't really be long unless you took a tight risk at $1 and tied it up at like a 98-cent stop. Or if you broke 163 for a technical reversal, keyword technical reversal, because this company sucks eggs.
Emotional damage.
Anyway, I personally would not put any money into Thriller. I would highly suggest you consider staying away as well. Next is Hims. Another retail darling is Hims. Going back to basically the beginning of April, we've consolidated around the 200 MA, which is pretty solid, and now starting to break to the upside here, getting above its EMAs and MAs, or short-term EMAs and MAs, starting to curl up to the upside, looking pretty solid. Basically right around here, 31 bucks to get a break and push to the upside to get some more confidence coming into this name, but not a bad name by any means at all. Keep in mind, you do have earnings coming up on the 5th. That obviously will impact the stock as a whole. Now, with that being said, this left a tiny little gap up here all the way at 50 bucks. It's trading 30. Depending on your risk profile, you could consider this name. I tend to be very cautious around companies like this. When retail just dives on a company just because GLP-1s and whatnot. It may sound unintelligent that I said that, but I don't think they have anything too special. They've got good marketing, they've got a good brand, but what they offered to the public outside of that isn't anything too unique. So unless they have something special, diversified, some level of creating a moat, I would be very cautious on this name. A momentum trade for sure. Definitely, you could hold a good momentum trade, but I'd be very cautious. What I would be cautious about, especially if it doesn't break that 31 area, 31, and I'd watch 35 specifically, because you could have a very big head and shoulders kind of look going on here. So taking the stab at the 200 MA, the boat's already gone in my opinion. You're at 20. That was back at 26, 25 bucks. Down here, this whole month was basically the time to consider. Today it's testing that tricky area between that. We'll just call it 30 to 35. So I'm not necessarily bullish or bearish. I would wait to be bullish on Hims for two reasons. One, to see if they implement something that is new, exciting, some sort of development of a moat. And two, to see if they can successfully break through that 35 area. Now, again, that earnings coming up is more than likely going to be, we're going to see some of that information, or could see some of that information. Otherwise, I wouldn't be too aggressive on Hims. Next on the list is NVIDIA. The darling of the internet, the darling of the stock market, the future of all finance, NVIDIA, currently trading at 108.56, sitting on its 0.382 retracement from the all-time high. Kind of iffy. It looks like the market. It looks like SPY, and it's because it is. It's SPY. It's the same chart, essentially. I would be cautious. What was this, back in February, This area right here is the most important area. If you trade Nvidia and you're longer term bullish, so I'm not saying short term, but you're longer term bullish, this 123 to 125 area, 124.5 and a little bit above there. What is that? Come on, I'm timed here. 125 even. This area right here is the line in the sand ultimately. Above that, bulls can get very bullish. Beneath that, it's questionable and you want to be very careful. What I was highlighting a few months ago here back in February is looking at all these wicks, and we talked about that with that short trade, right, that you guys saw live that I took this morning on the SPY. This is the monthly chart. You've got wick, 5 in a row up here before drawing down. Now, counter argument, you're wicking to the bottom here and pushing to the upside. So I think there's some level of price discovery going on here. I wouldn't shock me to see it bounce between basically like 105 to 125 for this point in time, especially with all the tariff drama going on. If and when there is a tariff deal, this stock will move hard. If and when there's a tariff deal in regards to rare earth minerals or anything like that, this stock will move hard. However, if there is negative implications that are felt by Nvidia, especially meaning they have a ton of orders that they can't fill because they don't have the means to and they don't have the supply to, this stock could get a harsh retracement because the demand is there, right? But if the supply is not there to fill the demand, well, they can't make money. And that's a real risk here. And if that happens, it could kick some air all the way down to like $50, which sounds salacious, but it's true. Keeping that in mind, if you want to be a super safe investor, obviously that $100 level is going to be very, your very big caution point. But like $93-$95. I'm not saying be long or short Nvidia here at this point in time. I would just be cautious between 100 and 125. Good day trading vehicle, but outside of that, if you're an investor, I don't necessarily think now's the time to accumulate shares. But it's not the time to necessarily run out the front door screaming and sell them all either. It's if you're already in, you're in. With that being said, I think there could be other places to park money that are better and will yield you better returns in the near term. Next is Playtika. Currently trading 529. This is a fairly unknown name, but pretty decent chart. Got all the way down to $4. Has earnings coming up. So this trade in particular is very earnings sensitive. If it breaks this 546, it can move up to the 667 area pretty quick. Quick move to 6, breaking that fills the gap and getting it back to the $6 area, $6-7. Where it's clearly more comfortable. If we look back on the daily chart here, it likes to be around this like $650 mark. So a dollar appreciation here. Obviously a risk on earnings. If you're trading equity, could risk about $5 here to the downside. I'm sorry, $5. Risk 5, meaning you're risking about 30 cents if you enter today for approximately a $1.30 markup. So you got like a 4-to-1 risk to reward scenario on this name. I like it for their bull side trade. I wouldn't short it in this point in time. I think it is primed to move to the upside in general. However, again, the risk is earnings. If earnings are bad, this company, anything can happen. Binary event, anything can be said during an earnings call. So just be mindful of that. But keeping that in mind, it's not a name that I would take. I don't even know if they have options. They do have options. Not a name I would take an options risk on, but an equity risk, if managed, could yield pretty well. Like I said, $5 stop, risking to get to about like 650, 670. Pretty good risk to reward if you like that kind of exposure. This company works in live game operations. So if that's something you don't have exposure in, you want some exposure in, I believe it's a lot of like gambling. So if you want some like live gambling exposure, which, hey, in a recession, people are going to drink, they're going to do drugs, and they're going to gamble. That is recession proof. It will happen. Casinos are going to be fine. They may say they're not fine. They'll be fine. Alcoholics are still going to drink. Smokers are still going to smoke. They won't go anywhere. They'll find the money. Trust me. All right, next we have Ford. We got 4 more names. We're at 12 minutes and 20 seconds. Let's keep it rolling. Ford here is a very interesting name. A lot of volume these last 2 months, and with wicks pushing higher, suggests that bulls are trying to step into Ford. Keep in mind, again, earnings coming up on the 5th. So next week you're going to see that currently sitting right, this dark blue line here is my 200 MA. try to break above it, wicking it and getting rejected here. You could have a pretty tight risk to reward if you like this name, if you want some exposure in Ford specifically, some auto exposure. I would look to risk somewhere between 980 to 960 on the downside. If you get an upside push here, getting to like that 1068 near term, so very short term, would be what I'd be looking for. Not a great risk to return in general, or risk to reward. You're looking at like a 1-to-1, but you get a dividend if you're holding stock in this name. And based on the monthly chart, and even on the weekly, you could be off to a pretty good push here if you get over that first price target of 1068, pushing over the 200 MA on the weekly at around 1128. This could have some clear skies. It all really depends on that earnings. You had a long period of consolidation here. Long period. Look at this time frame. Was this from 2022? Some up thrust into like the 13-14s here. Your peak right around here at like 980. So this is a snail though. This will not move quickly. So be conscientious and prepared for that. If you're someone who likes fast trades, this is going to be a snail. So if you like that, there's opportunity here. Especially if it breaks over this 13-14 range to get back into the mid to high teens, maybe 20 if you're lucky. So not bad, and you get paid a dividend while you wait. So again, watch out for the tariffs though. It will impact autos. Next is Tesla, the story stock that we kind of spoke about a little bit earlier. You are right. This is a critical level for Tesla stock. We already had earnings, so that's out of the way, as unlike the other names we talked about, with the exception of Google. But right here, 291.85 is an LOI I've had on this chart for quite a long time. LOI stands for level of interest. And on top of that, the 200 MA is right there as well at 291.45. So this area right here is a decent spot to be patient and wait, or take profit if you're a short-term bull. It will not break quickly. It will not break without, it just won't go on the first touch, which is today. It's the first touch, it rejected lower. It more than likely will drift a little bit lower. Now, if there's news or something to break this, you will get a volatile push on Tesla. You probably mark up to 345 pretty quickly. And if it gets squeezed, 384, like pretty quick markup here. However, I personally would wait to break over the 200 MA. And if you want to be very cautious, which Tesla and cautious don't really go together, but if you want to be very cautious, wait for 309.22 before being bullish. With that being said, or actually, let me say this. Wait for the 309.22 tap, come back and back test the 291.85, then go long with a tight stop. That would be an ideal setup. Now, with that being said, depending on your feelings on Tesla in general, I wouldn't necessarily be short this name. So even though I said this is a tight resistance here, unless day trading's, we're not talking about that right now. But like near term, I wouldn't necessarily be short this name. It could come back to this 275 area. But risk to reward in general favors the bulls on this name, with what I laid out in front of that to validate those claims. So I would lean more bullish on Tesla, but it has to fulfill what I outlined here for me to be a justified bull on Tesla. Two more left for you. We're at 16:17, so I got 4 minutes here. Next is UPS United Parcel. If you don't know what UPS is, and I don't know what's wrong with you. You definitely order off Amazon and you get packages, so you know what UPS is. Brown trucks, come on. Anyway, it's just downfall. Not a great look. However, the one shining light, someone can correct me if I'm wrong, this is the very first time in history UPS has interacted with the 200 MA on the monthly chart. Ever, period. In history. Someone can fact check me on that, and feel free to type in the chat if I'm wrong. But from what I can see, this dark blue line chart, this is the monthly chart, this is the only time in history, and it actually might be a little off. It's pretty close though. 90, 10. All right, technically it didn't tap. It was like 40 cents off, but very, very close and wicked up pretty aggressively on the monthly. So, although the weekly looks like hot garbage, although the daily also looks like hot garbage, this company, from a long-term investing standpoint, may be at a point where you could take a pretty healthy stab, again, investing in UPS here. Looking at anything north of 90, I think is a decent buy here. Not much has really changed in their business model, obviously, and I don't think they're I mean, they're seeing some competition, but not enough that it warrants a 50% drawdown from all-time highs. Again, this is going to be a snail like Ford. It's not going to move quickly. But risking, even if you want to just risk under the 200, like an 89 stop, there's plenty of room here for the upside if you're patient. I like UPS quite a bit. Again, you would have to be patient on this name. It will not be a quick mover, but depending on how earnings come out tomorrow, that could change everything as well. So take that with a little bit of grain of salt. Last, and definitely not least, GameStop. Now, I was bullish, full transparency, I was bullish on GameStop, and I rode this wave up, and I recently closed my long, and here's why. There is kind of a head and shouldery kind of look setting up here. Your first shoulder right around here in February, your head right here on that 326 pump up, and then your second kind of shoulder right around here. Very iffy. As a bull, you would want to reclaim and get above this recent high at 28.25. As a bear, you basically want to sink 27.11 for a potential start to a bear move to the downside, at which point you'd be looking at like 25, breaking 25, and you could get pushed all the way down to like the lower 22s-ish area. I think the risk reward here favors the bears. I wouldn't necessarily be bullish on this name at this point in time. With that being said, they do have Bitcoin exposure now, so if Bitcoin does happen to rally in the near term, that could cause a flux here in the name. They also are sitting on a treasure trove of cash. So for bulls, you want to be mindful of that, and bears, I guess you want to be mindful of that, because they could do some sort of M&A activity, which could obviously affect the stock price, or restructure debt, etc. All things that could affect the stock price. So things to keep in mind with GameStop specifically. So wouldn't be bullish at this point in time. There are bull catalysts that are there, but looking at the chart alone, I would be a cautious bear, meaning I'd lean more bearish, but be aware of the risks associated with being a bear. That was 10 names in under 20 minutes. It was 19 minutes and 49 seconds. Not too shabby for me at all. Not too bad. Hopefully that was very helpful for you guys. I'd like to give you guys a quick rundown, give you a few names. If, like I said, look for. That's going to wrap up the show for you guys today. Do me a favor, if you haven't already, drop a quick like on the stream, subscribe, follow me wherever you're watching this right now. Helps me out in all of the algorithms, and I appreciate it greatly. Some say that you will need an edge to trade. Well, I like to look at things from a different angle, and that is what you'll get here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction.